I would say that Sol is a powerful solution that unlocks liquidity by connecting multiple lending protocols across multiple blockchains. It allows users to benefit from the same yields of their preferred lending protocols while earning additional incentives, unifying borrowing power, accessing new yield opportunities, and also optimizing the revenue and interest of their positions. It's literally like a one-stop platform that enables DeFi users to manage all their lending activities through a single application and, again, without the need to bridge any liquidity.
In this episode, I sit down with Ahmed, CEO and co-founder of Sol, to hear the full story behind the protocol. Sol isn't just another lending platform, it's a whole coordination layer, a new DeFi primitive that lets you supply anywhere and borrow anywhere across chains and protocols. So far, DeFi lending has been fragmented. Collateral is locked, bridging is risky, and capital sits idle. Sol fixes this. No bridges, no silos, just unified liquidity across Aave, Compound, Venus, and more, all from one seamless interface. If you're curious about the future of DeFi and how real utility unlocks mass adoption, this one is for you. Let's dive into the story behind Sol. How's it going, everyone? My name is Steven. I'm the host of the ACC Podcast from Asterizing Ventures, here with the CEO and founder of Sol, as well as Hatem Protocol, Ahmed Sergini. Welcome to the show. Thank you so much for being here, Ahmed. How are you doing today?
Well, thank you very much for having me. Doing pretty good, actually. So yeah, what about you?
Man, I'm doing good. The Token 2049 event was in Dubai over this past week. So the internet has kind of been buzzing with all sorts of things, talking about AI and talking about DeFi. And there's a lot of excitement in the space. And obviously, we're here to talk about something very exciting that's really, I believe, going to revolutionize the space of DeFi as well. Sol Protocol, a layer above the existing DeFi lending protocols, and pretty much just a one-stop shop to borrow anywhere, supply anywhere, and just streamline the entire user experience for DeFi. So really looking forward to getting into that. And from that point, let's just go ahead and hear from you, just kind of from a high-level perspective. What is Sol Protocol, and what do you really feel like distinguishes it from the space according to what is available these days?
Sure. So I usually describe Sol as a cross-chain lending protocol aggregator. So
Mm-hmm.
it is built on top of established platforms like Aave, Compound, Venus, and so on. So instead of competing for liquidity, we are actually connecting protocols across different chains into one single and unified ecosystem. It is kind of like what 1inch did for DEXs, like Uniswap and Kyber, but in our case, it's for lending protocols. And in simple terms, if you supply assets to Aave on Ethereum through Sol, you can use that same collateral to borrow from Venus on the Binance Smart Chain or from Hatem on Multiverse 6 or any other supported protocol without having to bridge any asset. So yeah, I would say that this is what Sol is at a high level, and
Mm-hmm.
Sol effectiveness is around unlocking liquidity across multiple ecosystems. So it lets users stick with the lending platforms they already trust, while boosting their efficiency. Whether it's through offering them the possibility to access better yields, unifying their borrowing power, or access new cross-chain opportunities. So yeah.
That's awesome. So you mentioned the term unlocking liquidity. So dive a little bit more into that. What does it mean? Because whenever I put my money on any sort of DeFi platform, I have a lot of flexibility to lend and borrow within those specific protocols. And for the most part, I feel like my liquidity is still my control. After all, this is decentralized Web3. So can you elaborate a little bit more on what you mean by unlocking liquidity?
All right. So right now, let's say that in the current lending space, users are limited to the opportunities that are offered by one single protocol where their liquidity is supplied and in one specific chain. For example, so if you supply your assets on Aave, you are able to take advantage of the opportunity and the yield that Aave is offering and only take loans from Aave itself. So what Sol unlocks is the possibility for you to supply like your asset on Aave and be able to take a loan from another protocol on another chain. So for users, they will be able, for example, to supply their assets on, let's say, USDC on Compound, on Arbitrum, because this is where they are getting like the best supply APY for that asset. And if they need to take a loan of it, what they could do is define the protocol that is like offering the best interest rate for borrowing it and perform that. So in a way, so they are able to optimize their like the yields that their position is actually generating while being able to access liquidity in a cross-chain manner without having to bridge their asset from one chain to the other to be able to do that.
Gotcha, cool. So there is absolutely no bridging involved in the process whatsoever?
Now, so like no bridging takes place in the whole process. And this is like one of our core innovations. So we don't actually like bridge asset between chains. What we do is we rely on cross-chain messaging solutions like Layer 0, XLR, Wormhole, or CCIP to send cross-chain messages between different networks to update what we call the controller smart contract, which allows us to track users' position and enable actions like borrowing or adding collateral, regardless of which chain the user is aiming to interact with.
Awesome. Yeah, that's a breath of fresh air. I have dealt with far too many bridging endeavors in my life, one of which resulted in the loss of funds. That is a very sad story that I don't want to get into today. But yeah, it's a complicated process bridging. I'm a Multiverse X user among a few others, and in the process of bridging, it's a lot to understand, and there's a lot of warnings along the way. And whenever it's decentralized, we're controlling our own assets, signing smart contracts, sending our money all over the internet, and if we make a mistake, that's our mistake to bear. So the fact that we're able to manage all of our positions, it sounds like, under one single protocol, one interface. You mentioned Axelar and Wormhole and a controller contract. Sounds like a lot of things kind of going on behind the stage. So it's a pretty complex system, but overall, the website, the testnet is up, which we'll get into that in a moment. But the testnet is a really fluid process that really streamlines the experience. And yeah, I totally understand what you're saying now by unlocking liquidity, because if you're supplying collateral on one particular blockchain or protocol, you aren't able to, move over to another protocol, another lending platform, and kind of use that same collateral to achieve, a yield or, take advantage of some other DeFi opportunity. So that's definitely something that the space is needed for a long time. How come it's taken so long for Web3, for DeFi to have a layer like Sol?
Yeah, like there have been multiple like protocols who tried to create like a solution, like I won't say like similar to Sol, but who tried to resolve the cross-chain lending dilemma, but they failed to do so because of their approach. So most of them tried to create like their own money markets on the different chains, and it is like nearly impossible for them to be able to compete with the pioneers in terms of lending on each specific chain and to be able to build their TVL. So the approach that most of them were following wasn't the right one. What we are doing like differently through Sol is creating like a model that instead of competing with the existing like lending protocols relies on creating like synergies with them and builds on top of them. So yeah, I would say that the approach that we are like following is completely different, and this is like what makes Soul pretty unique in a way.
Yeah, that sounds really cool. And for those that are not as familiar with DeFi, what does the process look like as it is today to get funds to borrow, because normally in the banking system, maybe if you have zero DeFi understanding, a lot of the time you either need to, show proof of income that you can pay back a debt, or supplying collateral. In the event that you can't pay back a debt, then that collateral is taken, which sounds like much more of the route. There's no kind of like credit score that Web3 has so far. So I understand as well that you have a history, you have background in finance. So help users and help me understand kind of bridging the gap between the traditional finance route of borrowing funds and what that kind of looks like in this world of Web3 before we move on to more specifics about how Sol is changing the game.
I would say like the main difference between like the two processes and why in DeFi it is like way more powerful is the action of taking loans in a DeFi like environment is completely like decentralized. So we don't need to have certain like approvals or be able to get like some, I would say like requirements in DeFi. Like how it takes place is you only need to have like a certain amount of collateral that you supply like in the protocol, and based on the amount that you have supplied, you will be able to take a loan of a specific size, basically. So everything happens in a pretty like decentralized manner. There is like no middleman, and you can do that and manage like your positions like freely, as long as you are like maintaining more collateral than the amount that you are taking to take as a loan. You are able to perform like all your interactions, which is like not the case at all in the TradeFi world, let's say.
Awesome. Hadam Protocol has an over collateralized stablecoin. So that is something that is already represented in kind of the branch of Sol Protocol. So that clearly is a complex DeFi problem, I would say, when it comes to kind of writing smart contracts and ensuring that the user has the right, really, to kind of borrow these funds. So help me understand a little bit more, put it into practice for us. Say I bring $1,000 of USDC from Ethereum, from an EVM chain. What would the process look like to interface with Sol Protocol and start using that collateral across all these different chains?
So we try to create like the most simple, seamless, and straightforward process. Actually, like your experience will be like exactly similar to the one that you have with traditional like lending protocols. With the sole difference is that with Sol, everything is happening like in a cross-chain manner. So for you, for example, if you want to take $1,000 of it and you would like to supply it, let's say on Aave, so you will be able to do that like through Sol. A certain amount of borrowing power will be defined based on the collateral factor of that specific asset. So let's say that if with $1,000 like supplied, you are able to take a loan of $800 in total, you are free to select any of the assets available on the different like protocols integrated into Sol. You can define the amount that you would like to take as a loan and perform the transaction directly. What happens in the backend is that once you want to perform the transaction, so what will take place is that we will be like communicating between the smart contract of the chain where you are like starting the transaction with the one where you want to perform it, basically. And yeah, tell the smart contract that this user has like this amount of collateral, and for him like to be able to check if you are able to take out like that loan. So you will be able to repeat like the process as long as the amounts you are trying to take as a loan are covered by your borrowing limit. And if you decide to add like another asset as collateral in the same position, so you will have like a unified borrowing power, which means that if you put like $1,000 of collateral on the Ethereum chain, $1,000 of collateral on the Arbitrum chain, you will end up with a global position represented by $2,000 of collaterals.
Okay, that's really game changing. the opportunity to just supply collateral in one particular place and be able to use it across the board. And we already mentioned without bridging anything, no bridges involved. This is all just seamless integration. That's really going to change the game. And I can see a lot of different opportunities for this aside from just saving time and money. So, from your perspective, aside from the plain and simple simplicity and user experience that's improved by just having this one interface, what are some of the key components or even DeFi strategies that Sol is unlocking through this cross-chain protocol, aggregating all of the opportunities in the world of DeFi?
I would say that Sol will actually like change the way people can manage their cross-chain lending activities. So
Hmm.
it lets users unify their borrowing power across protocols and chains. It allows users to optimize their positions. Like as I said before, they can supply assets on the chain or protocol offering the best supply APY for a specific asset, and then at the same time borrow an asset from the one offering the lowest borrow rate, all without like bridging or switching like interfaces. And this unlocks a completely like new layer of strategy. So instead of being limited by a single chain or opportunities of one protocol, users can optimize their positions across multiple platforms and chains to maximize their returns while at the same time minimizing their cost. I would also describe Sol as a lending infrastructure that thousands of applications and protocols can build on top of to leverage the liquidity it is unlocking. So, yield optimizers, liquidators, arbitrage bots, or anyone needing capital efficiency across chains can tap into Sol to access instant liquidity without needing to bridge every time an opportunity pops up. So, to give you like an example, so for users performing like arbitrage, they don't need to move their funds across multiple chains to take advantage of the opportunities. What they can do is simply hold one collateral on any supported network, borrow the asset they need, execute the strategy, repay the loan, and keep the profit at the end. And the same applies to liquidation scenarios. So the goal of Sol is to make cross-chain lending like not just easier, but also like more powerful. Yeah.
Yeah, more powerful. That is absolutely what comes to mind when I think about what Sol is bringing to the table. So you mentioned a lot of different chains. Obviously, they're all kind of above. It's on a new layer that kind of brings them all together. I know you mentioned this controller contract. And I'm curious, what are the rewards on Sol versus other chains? I mean, if I describe myself as a maxi, let's say, and I don't really care very much about what's going on other chains, other protocols, and I'm really just using all my liquidity on one particular lending platform. I guess why would I be compelled to use Sol versus just kind of remaining a maxi and not caring much to participate in other yield opportunities?
In terms of Sol, what is like really important to understand is that it is a chain agnostic solution, which means that it can be built on top of any EVM, but also like non-EVM chain. And
Okay.
through our business model, what we are doing is we are building on top of the existing lending protocols and replicating the same parameters that they are offering. So let's say that if Aave on Ethereum is offering like a yield of 6% for supplying USDC, if you decide to supply USDC like on Aave through Sol, you will get the same rate, if not more, of 6%. And on top of that, you will be earning any additional rewards that Sol is distributing on that specific money market. And those additional rewards are generated from Sol revenue that is distributed to suppliers and token holders on the protocol too. So in a nutshell, the yields that Sol will be like offering will always be like more attractive than the ones of the base protocol, which means that it will always be like more profitable to supply on Aave through Sol than to supply on Aave directly. And this is like without mentioning all the other benefits that Sol like will unlock for users on top of that, like the possibility to unify their borrowing power, to access like cross-chain liquidity and so on.
Man, that is awesome to hear. I'll just repeat it back to you to make sure I get this right.
Yeah.
So let's say that I'm not using Sol, I'm just maybe supplying on one particular lending protocol, getting yield through that particular coin. I'm receiving rewards in the token that I am supplying, but if I use Sol, you would be making the same yield through the particular token that you have supplied, and then making even more on top of that through another token, or how does it work?
So you got it like completely right. If you supply on that same protocol like TrueSol, you will earn the supply APY in the same asset that you have supplied and at the same rate, if not like higher than the one of the base protocol. In addition to that, you can earn like any additional incentives that are distributed by the base protocol itself. So all the parameters are replicated. And additionally, you will earn additional rewards that comes from Sol's revenue that will be like redistributed to the different like suppliers. And that revenue will actually like be converted to Sol tokens and then redistributed to the different like suppliers who will be like token holders too. Maybe like I can expand more on the revenue side also because it is like very linked to this specific part of the discussion. On the revenue side, like we got multiple streams of income. So we can apply a reserve factor on both the supply and the borrow sides. We can also implement a base fee on each cross-chain borrow interaction. And this is especially like powerful since this revenue stream is tied to the volume and not to the TVL. And it is a revenue model similar to DEX's, with the difference that we're not like splitting the revenue with LP providers. In addition to that, we also collect penalties through liquidations, and we can also generate some fees from flash loan services. We can integrate solutions like Stargate and earn a portion of the fees they charge from any liquidity we route through them. So as you can see, like the protocol has the potential to generate a considerable amount of income. So our goal is to make the Sol token utility driven and directly linked to the protocol itself. So besides the governance power, we will also implement a buyback module where all the protocol revenue will be constantly used to buy Sol tokens from the open market, which will create like a constant buying pressure, but also drives more trading volume to the token. So those same Sol tokens that will be bought through the buyback mechanism will be redistributed across the different money markets to boost yields and to ensure that Sol always offers more attractive returns than the base protocol itself. We have built multiple like utilities around like the Sol token because like additional to what I just mentioned, the token holders will be the ones in control. So they will be the ones defining what we are calling the gauges and the emissions, which means that they will decide on which money market the revenue will be distributed, but also how much will be allocated to each one. And additionally, we will be like introducing a position boosting module. So where users like must supply liquidity and boost their position with Sol tokens to be able to earn a share of the protocol revenue. So you don't need to be like only a holder, but you also need to be like a contributor to the platform itself. And yeah, like the goal is to build a sustainable ecosystem that is like rooted in a real utility and long-term ecosystem growth.
Wow. So let me understand correctly. So the Sol
Yeah.
token, you mentioned that there's a lot of revenue share, and none of the revenue that Sol generates goes to liquidity providers. It's only being shared with the Sol token holders and stakers.
So actually, like they need to be both. You don't need
Okay.
to be like only a token holder, but you need to be like a token holder who is also a contributor to the protocol. So you need to be like supplying liquidity and then staking Sol tokens to be able to earn a percentage of the revenue that the protocol is generating.
Okay, gotcha. Well, man, that's really exciting to hear that. And as I'm learning more about Soul through this conversation, the question that really just comes to mind, and it's a question for you, Ahmed, is, I mean, why would anybody be lending on the base protocol? Once the Soul mainnet goes live, right now you're in testnet phase, which we'll get into that in a moment. But once the mainnet is live and everything is up and running, I mean, are you're trying to complement the system. It's going to add a lot of cross-chain availability. But is Sol going to? I know it's built on top of these existing protocols, but it's still contributing? It's not competing. So I guess Well, I guess, yeah. Why would anybody want to be going directly to the base protocol to be supplying there if they can go to Sol, make more yield, don't have to deal with bridging? Um, I want you to play devil's advocate. Is there any reason that maybe it wouldn't appeal for somebody to use Sol?
Well, to be honest with you, I think it will be like a no-brainer for
Yeah.
anyone who wants to optimize their cross-chain lending activity, or just like optimize the yields that they are like generating, to directly like use Sol instead of using like the base protocol directly. And through our approach, again, so we are actually like working hand in hand and routing liquidity back to the base protocols and helping like their growth in a way, while connecting between different protocols across like different chains and unifying like their liquidity. So yeah, I think that it's actually like a no-brainer to transition to using like Sol once we go live on mainnet.
Yeah. And as you were talking about some of these kind of side benefits of Sol Protocol, one that isn't a direct positive influence on any user per se, but just the idea of the arbitrage, how users won't have to have the latency, the time between bridging assets to take care of a arbitrage opportunity. Nobody directly benefits from the concept, but the Sol protocol will really help to level the playing field. I mean, like in a roundabout way, won't the differences in price of assets begin to be more stable, since the time between the disparity between two different protocols is shrunk to now mere moments with Sol. So this is going to unify all liquidity, and it's going to kind of provide, from my understanding, it sounds like it'll just provide more stability of the price of assets across the entire ecosystem. Is that right?
Well, we can say that it will contribute to that, and what it will like contribute more is to stabilize and arbitrage between like the rates offered by the different like lending protocols, as people by going through Sol will try to optimize the yields that they are generating, and as Sol grows we will be able to reach a certain like equilibrium between the integrated protocols in terms of the supply APY that they are offering, but also like the interest rate that they are like charging across the different like money markets. So yeah, I would say that the impact that it will have will be quite like powerful, and it will help stabilize like in a way the whole like cross-chain lending field.
Yeah, this is huge for people chasing yields across chains. And me personally, I am always excited and intrigued by anybody who's building something that is really directed at the end user, because myself, I mentioned at the beginning that I've dealt with some bridging problems. And it's one of those things that in the world of Web3, it's a new technology that many people haven't truly interfaced with, and if they have interfaced with it, it may be as simple as just buying some tokens on Coinbase or something like that. And the way to really take advantage of this new infrastructure, this decentralized infrastructure, is to get into DeFi. Don't just hold your coins, but let your money work for you. You earned your money, so might as well put it to work. And the opportunities that yield has provided through existing protocols has already added that second layer of kind of a dangling carrot. All right, I bought some tokens. Why do I want to go any further than that? And if people realize that there are ways to make their money earn more for them, then that's great. But so far, every opportunity has kind of required users to, take more risk by, bridging their assets, by having to learn new protocols, and, ensure that they're doing it all in a safe, secure manner. So I'm excited by the just simplicity it sounds like Sol is really unlocking for the world of DeFi. And in 5-10 years, it very well could be the kind of global bank. So are you guys competing with the banking sector? I mean, I think obviously the answer is yes, but tell me about the vision of Sol. What are you guys looking to achieve in a longer term vision?
Well, I would say that to give you like a really brief sneak peek about the future of Sol. So once we solve the cross-chain lending dilemma, unify liquidity, and achieve a good TVL, well, one of our objective is to start like working on integrating real-world assets into Sol, because we believe that the DeFi sector is a pretty niche field compared to the TradeFi one, and its liquidity is practically like insignificant compared to it. So through this integration, what we want to do is to be able to allow treasury bonds, but also like stocks and tokenized buildings to be used as
Oh
collateral
wow.
to access liquidity in a cross-chain manner. And we believe that, yeah, with the proper execution, Sol has actually like the potential to become like one of the biggest banks.
Man, that's an incredible opportunity and really just touches on something I think that all users of DeFi and cryptocurrency have been interested in since the day one, not having to rely on any intermediaries to control their assets. So definitely looking forward to following along the journey. Wishing you guys all the luck for sure. But let's talk about some real world numbers now, because the testnet for Sol has now been up and running for what, about 2 weeks now? Is that right?
Nearly 2 weeks, actually. Yeah.
Man, congratulations on the successful testnet launch so far. Do you have any numbers that you can share with us?
So I would say that as of now, we had more than 213,000 users, more than 94,000 unique wallets testing the app. We've exceeded 600,000 cross-chain transactions
Wow.
and more than 1.5 million operations that have been performed since the beginning of the internet, actually.
And
So
it's been live for how long? 2 weeks?
nearly like 2 weeks, like 13 days exactly.
Holy cow, those are some serious numbers.
Well, we've been like receiving some insane traction. There has been like a lot of interest about Soul, and for us, uh, that created, you see, like the best opportunity and environment to be able to stress test the solution to make sure that it is able to sustain a huge amount of users at the same time. To test, you see, like all the different functionalities. So, just like one fun fact, during like the day where we have like launched Soul on testnet. So in our model, what we are doing is using like integrating multiple like solutions, interoperability ones, and we are using like layer zero as a default one, and we have what we call like fallback systems. So it means that in case something like happens with layer zero, what we could do is pivot to one of the other interoperability technologies that we have like integrated. So on the testnet, like most of the protocols are not like maintaining their infrastructure at the same level of the minute ones, because the testnet
Mhm.
is aimed to just like perform a couple of transactions but not like sustain, you see, like a huge amount of traffic. So what happened is that we had a big amount of users performing like cross-chain transactions, and the whole, let's say, layer zero like infrastructure uh, wasn't, you see, like processing any cross-chain like transaction. So our users like were stuck. They weren't able to continue like with their testing. And what we did is we had like the opportunity on the first like couple of hours to try out one of our main features, which is like being able to pivot to this fallback mechanism. And we used like wormhole to perform, you see, like the different cross-chain transactions. So users directly like were able to resume their interactions, complete like their quests and so on. And yeah, it was like actually like a very great opportunity to try out like the different features and make sure that everything is working like perfectly with Sol.
Yeah, that's a funny kind of opportunity there. The test net was so successful that, not by intentionality, I'm sure that you guys wanted everything to run seamlessly. You mentioned that layer zero is the default, and you have three others: Axelar, Wormhole, and CCIP. So is it kind of in that order, or is it kind of like anytime there may be some interruption on layer zero, it kind of almost in a decentralized manner just kind of automatically chooses some of these fallbacks just to make sure that there's no user interruption?
So it doesn't happen like automatically, but what we have is what we call like guardians, who are in charge of actually monitoring what is happening with the main technology that we are using, and if needed, basically like switch to one of the fallbacks to allow the protocol to continue like running smoothly and for users to continue performing their interactions.
All right, awesome. So 4 total layers you mentioned it for the kind of overall the fallback mechanism is kind of 3 in particular, but layer 0 is the main one. Is that correct?
Indeed, it is. There is like no specific order in terms of which fallback could be used. We could use like any technology between like the connection or the communication between like two specific chains, and the whole infrastructure has been made, like the whole Sol infrastructure has been designed in a way that it is like flexible. What I mean by that is, if there is like a new technology that is built, appears, you see like in the upcoming years, that it proves itself, I would say, like more secure, more reliant, and would allow us to optimize the Sol solution. Well, we could integrate that one and add it as either like default or fallback mechanism into like the Sol solution, actually.
All right, that makes a lot of sense. And it's definitely required, especially considering our previous conversation there about how in 5, 10 years, maybe Sol could be, the next big worldwide global bank. So definitely need some fallback mechanisms to make sure that the users are able to, take care of everything that they're needing to do. And especially so that they can keep on making that revenue through the token model that you guys have through the Sol token, kind of, built into the protocol itself. This is all sounding really great. And I think that a lot of our viewers out there are going to be really interested in this next section, which is the first public opportunity to get our hands on Sol. I already mentioned the Seeds campaign, which will be transferred into Sol, but the partnership Sol has with X Launchpad was just announced. It's going to be a very public, very fair launch. It's all news that just came out within the past week or so. So let's hear a little bit more about the first public availability of the Sol token. Tell us more about the alignment, participation, and kind of the first principles that are going behind the token design.
Sure. So let's say that through this model, what we try to do is to create a model where we are like encouraging fair participation, but also like long-term alignment from the first day. So we are actually allocating 25% of the token supply to the community through this public round, which is more than 3 times higher than the allocation of the pre-seed participant. And the goal is to lay out the ground for decentralized governance from the moment we go live. So the final valuation of Sol will be set by the outcome of the public sale, and it will be like determined purely by the capital that will be raised. So we are actually like intentionally avoiding the typical issues of inflated, fully diluted valuations and minimal circulating supply. So all public round tokens will be like fully unlocked at TGE, giving or let's say ensuring a transparent and also like a market-driven price discovery from the start. So yeah, I would say like this is a bit like the reasoning behind our approach and the model that we wanted to create.
That's awesome. And we already mentioned some of the revenue sharing opportunities that you get by holding, staking, and participating with and interacting with the Sol token. But you mentioned governance and long term alignment are kind of at the forefront of the Sol token. So I think that's going to drive a lot of demand. What do you think about the governance aspect of Sol? Should people be really interested in getting their hands on Sol to participate in governance? What do you think is the main driving factor behind these decisions that Sol has made?
So what we are trying to do with the Sol token is to create like a utility-driven token that is like also directly linked to the protocol itself. So Sol will have a governance power, which means that users will be the one defining the direction of the protocol. But besides this, there will be like multiple other utilities, such as the buyback module, where all the protocol revenue will be used to buy Sol tokens from the open market. And those same Sol tokens will then be redistributed across the different money markets that will be integrated into Sol to boost their yields and to ensure that Sol always offer competitive yields and that the yields of Sol are always more attractive than the ones of the base protocol itself. And during like this process, token holders will play like again a major roles because they will be the ones defining what we call the gauges and emissions. It means that They will decide on which money markets the revenue will be distributed, but also how much will be allocated to each one of them. Besides this, we will also introduce a position boosting module where users must supply liquidity into the protocol. And in addition to that, they will need to boost their position with SOL tokens to be able to earn a share of the protocol revenue. So, yeah, I would say that those are like the different utilities around or built around the SOL token.
Man, the Soul token is really connecting all of the dots within the entire infrastructure and bringing about not just a reason to use Soul as a user, having to avoid all of these bridges, all of these complex pain points that exist in DeFi today, but now rewarding users and aligning them with the long-term mission and vision of Soul Protocol to hopefully become the bank of Web3 moving forward. That's awesome. Clearly, yourself as CEO, I'm sure many of your colleagues would agree with you, but the point of utility cannot be overstated. Without it, I don't think that there's much reason for a token to exist in the first place. And the utility provided, as you just mentioned there, in addition to the public sales structure with this open model, is really exciting. And it really seems like the opportunity could not be overstated. And yeah, just the open model itself, it's a public sale, and the final valuation you mentioned will kind of be determined at the end of the round. And this is just to kind of ensure that there are no people who kind of take advantage of a early lower price and basically dump on the community later on. It's everybody kind of allocates their funds, and everybody gets the same kind of averaged out price for however much they've allocated.
Exactly, yeah. So basically, like the public, so like participants will be like the ones defining the valuation and the price of the round. So depending on what amount has been raised, the whole allocation will be redistributed proportionally to each of the participants.
Man, that's awesome. Hopefully, this is one of those defining moments for the crypto space across the board where we all see that an opportunity can be taken advantage of in a fair sort of way. So, yeah, for anyone who is interested in a more seamless experience as well as a more fair launch, getting involved with Sol at this point in your stage is really important, which touches as well on my encouragement to everyone watching this video. If you go on the Sol website, which I'll drop the link in the description, you can do a campaign to earn Sol tokens. It's Seeds, SEEDS, Seeds campaign, where it really just walks you through getting connected. Connecting your wallet, getting connected with the Telegram community, the Discord community, learning about the education side, the documentation. All of this is really just a seamless step-by-step process that will reward you with seeds, which will later be translated or rewarded with actual Sol tokens. So I just want to say huge hats off to the entire development community, or rather team behind Sol. And I understand as well that you guys won like best website of the year last year. So you guys clearly have a very talented team behind the entire protocol, from the back end to the user interface. So huge hats off and congratulations to you and your team.
Sure.
So yeah, just tell us about the next big milestones. I know you've got a few audits that have already been taken care of, such through runtime verification and probably others. You're in the middle of the testnet, which you just touched on some of those numbers. So what are some next big milestones, and kind of give us an update where you're at the beginning of May here, 2025.
So let's say that currently we are wrapping up our first audit with runtime verification. We will then have a second round of audits with partners such as OpenZeppelin, ABDK Consulting, Certic, and Hakan. And our goal is to prepare for the mainnet release once the second round of audit will be like completed. So I would say like those are our like immediate goal on a short term.
Awesome. And when can we kind of be expecting things to move forward? When can we be looking out for the token generation event for the Sol token? And do you guys have slated the mainnet launch?
So for us, it will like mainly depend on the time that will be like required to finalize the different audits. So what we want to do is to first have the protocol live on mainnet to start like our go-to-market strategy, attract TVL, start like generating revenue, and have the different like utilities of the token live before having like the TGE. So what we will have is the mainnet launch, and a couple of weeks afterward having the TGE once we'll have been able to achieve all the above mentioned, like started attracting like TVL, generating like revenue, and having the different like utilities live and working directly.
Awesome. Very exciting stuff. And pretty much all I really have to say is just encouraging yourself, keep on pushing. And I know you guys are very open to user feedback. So that, just points back to getting involved in the Seeds campaign, which again will connect you with Telegram, will connect you with Discord, and really just help to contribute to make the Sol protocol better and better. So whenever the time comes for mainnet, everything will be buttoned up and really just will bring about the most promise of success moving forward. So best of luck to you, Ahmed. Are there any main things that you want to touch on as we close out the video today? Or if there's any main thing that the viewers of this video should take away from the video, what would you have to say?
I would say that the goal of Sol is to remove the friction and complexity of cross-chain lending. The goal of Sol is to unify liquidity of different lending protocols across multiple chains, to connect between them, while at the same time offering the best user experience for users. I would invite everyone to give a try to our testnet, sharing with us their feedback over like Telegram and Discord. We are like pretty active there. And as for builders or anyone trying to create a solution on top of Sol, what I could ask them is to don't hesitate to reach out to us. We are already receiving a couple of requests of developers like trying to build applications on top of Sol, and we will always be happy to help and assist them during the process.
Awesome, Ahmed. Thank you so much for sharing all of this. As CEO, I'm sure you're extremely busy, so all the best wishes to you and your team. As mentioned already, encourage viewers of the video to get involved on Discord, on Telegram, and of course, follow along on X. So, Ahmed, thank you so much for your time, and looking forward to seeing Sol continue to grow, continue to improve, and provide this infrastructure to make Web3 better and better each day.
Well, looking forward to finally like have it live on mainnet, and thank you very much for having me. It was like a very good discussion.
Yeah, you're welcome. Thanks for being here, and we'll see everybody on the next one. See you later.
Bye-bye.